Okay, so this next video lecture is still the continuation of our Module 1 principle or basic principles of taxation. So we are now in our third topic, which is the principles of a sound tax system. So the principles of sound tax system are fiscal adequacy, administrative feasibility, and theoretical justice. Okay, so basically, when we say fiscal adequacy, this means that the sources of revenue must be sufficient so that it can meet the government expenditures and other public needs. Okay, so this is the principle behind a sound tax system. So again, the purpose of collecting taxes is for the government to use this for the expenditures for the public needs. Okay, while administrative feasibility, on the other hand, this means that tax laws and regulations must be capable of being effectively enforced, okay, with the least inconvenience to the taxpayer. And meaning administrative feasibility, this taxation system should be effectively imposed or enforced, and it should not bear any inconvenience on the part of the taxpayer, and it should be understood or well understood by the taxpayer why we should pay for that taxes and how to pay for it. Okay, there should be a system of payment and collecting. And for the theoretical justice, this means that the sound tax system must be based on the taxpayer's ability to pay, meaning as much as possible, the taxes that should be collected must be equitable also on depending on the income that is gained by the taxpayer. Okay, so meaning it should be fair and just and not too much, okay, for them to pay for the taxes. So those are the principles. Okay, so to continue or to expound, okay, these principles, we have here the following. For fiscal adequacy, the sources of tax revenue should be coincide, or it should coincide, with and approximate the needs of government expenditure. So meaning, again, that's why in every opening of the calendar year or the fiscal year, the government is having budget hearing. Okay, so here they already plan for this year how much do they need for certain projects of the different agencies, and from there they will have the target of collecting the taxes so that this expenditures or budget will be met. Okay, so that is fiscal adequacy. So the revenue should be elastic or capable also of expanding or contracting annually in response to the differences in the public expenditures. So ideally, our taxes should be collected and be enough for the operations of the government. So this again is based on the budget and the availability of funds and how to raise funds coming from the taxes to support these budgets. So government funds should not be lower than what is needed. What is ideal is at least the government fund should have more than what they need. Okay, so of course this is to give allowance for any adjustments, okay, or to make sure that the expenditures or the needs are being met. Okay, however, it should also not be more. Actually, not be more, but ideally it should be more. Okay, so that again, the reason is to make sure that the budgets will be funded but it should not be more in the sense that it's um, the different the fund is um, great, or it has a greater balance. But again, it depends, okay, on how taxes will be collected later on, actually. Okay, but the purpose of this is so that the public would not be overburdened with tax. Okay, but again, the government should make sure that the taxes that they impose and collect are equitable. Okay, so the principle of fiscal adequacy as a characteristic of sound tax system was originally stated, okay, in Adam Smith. Okay, so we all know that he is one of the founding fathers of economics. Okay, so here, every tax ought to be so convinced as both to take out and keep out of the pockets of the people as little as possible over and above what it brings into the public treasury of the state. So it means to say here that the sources of revenues must be adequate to meet the government expenditure and their differences or variations. And the dire need for revenue cannot be ignored. Of course, as mentioned, taxation is the lifeblood of the government. So our country is a quagmire of financial woe. But again, this need, okay, for revenue will be compensated by the taxes that will be collected from the citizens. For the administrative feasibility, so tax law should be capable of convenient, just, and effective administration. Okay, so meaning each tax should be capable of uniform enforcement, meaning if that is a national tax, the enforcement or the collection should be uniform for all of the provinces throughout the country. Okay, and it should be convenient also as to the time, place, and manner of payment on the part of the taxpayer, and not unduly burdensome, okay, or discouraging to business activity. So that's why we have in every provinces, we have the revenue regional offices, okay, for of BIR. I mean provincial offices, okay, of BIR, where the taxpayers of that locality can pay and file for their income taxation and other taxes. Okay, so administrative feasibility is one of the canons of the sound tax system. So this simply means that the tax system should be capable of being effectively administered and enforced. That is the main objective, okay, of administrative feasibility as a principle of taxation. And the third is the theoretical justice or equality. So again, under this principle, the tax burden should be in proportion to the taxpayer's ability to pay. So the government cannot just collect any amount. It should have a basis on how much a person, a property, or a business should pay. Okay, that is theoretical justice or equality. So those are the three important principles of having a sound tax system. So meaning to say, in a certain country or government, if they want to have a sound tax system, and we say sound tax system, this means that this is a fair, just, effective, and efficient tax system. So they should follow these three principles in formulating or creating their tax system. Okay.